Before the weekly analysis begins, I just want to let you know that I do have a Patreon page. We have two tiers available. The first tier is called Start Off for £15 a month, and what you will receive is access to a Discord server containing the beginners, intermediate, and advanced course, risk management course for Elliot Wave trading, as well as financial literacy content. This tier is also for those who want to learn at their own pace and generally just support what I do and just join a community of like-minded traders. The second tier that I have is called the Waveologist for £35 a month, and what you receive is everything that I mentioned above with the addition of specific chart requests for me to annotate on a daily and weekly time frame, and one-to-one support or group sessions depending on how many people have subscribed to this tier. The group or one-to-one sessions are for those people who want a little bit of extra help with their Elliot Wave education, and also give the opportunity to ask me as many questions. Please do keep in mind that these are going to be 1 hour sessions depending on how many people have subscribed, and also I would say please do consider joining. It is really good value for money, and without further ado, let's get into the analysis. Assalamu alaikum wa rahmatullahi wa barakatuh. I hope you guys are well. This will be my Elliott Wave forecast for pound yen, pound dollar, and gold. But first of all, any views or opinions or suggestions that are expressed in this video do not constitute to trading or financial advice. So here's my annotations for Gbpusd. I did say last week that we were in this sort of sideways movement, and we did kind of get a break up to the upside. As to be expected, as this I did say that this is a complex correction. This complex correction is kind of still valid, I would say. We are at the level where it has hit the sort of 1.23.6% level, and if we then eventually get a move back down as a expanded flat or running flat, and then that will basically complete our an A, B, C, and into a wave 4, and then we'll get one more push to the upside. Additionally, another scenario is that we are in a we already had a triangle formula, triangle structure right here, and what we have essentially here is essentially a B, C, D, E correction as a triangle, and wave 4 finished around here, and we are kind of now on that push to the upside, and this is a wave 1, wave 2, and we're kind of getting that wave 3 to eventually come in, then a wave 4, and then a wave 5 to the upside. So in the short term, I will probably say just still be a bit more careful. This could still come back down, give us a complex correction. And essentially what that basically means is it doesn't necessarily mean that anything's changed, just the correction is just going to drag out a bit more. So in the short term, I probably won't be trading out of this pair. I'll just be waiting and seeing to see what happens. If we do continue, I mean, the short term is that we are going to continue going up to the upside to give us obviously that fifth wave, as I've mentioned previously, and then eventually in terms of long term, we're going to see some sort of bearish movement eventually come back in to bring this pair down. So that's pound dollar. Here's pound yen. So obviously, if I said in my previous video as well that we're going to go up for that fifth wave, and we've got that fifth wave, which is extremely long. What we're essentially going to get now, to me, it looks like it's going to be a WXY here, and then that will give us our wave B. In terms of the short term, well, there's a few possibilities that can happen. The first possibility is that obviously we are still in 3 waves, so this is a 3, this is a 3, and this could come to around 90%. I think it is around 90% right now. Let's just double check right here, just bear with me. Where is it? 90%. So we've gone way beyond the 90% level, and you know, this could be a regular flat, and we could just see the market just push down, or the market could eventually just come take the top up, which is what I presume is going to happen. We're going to get a sort of move to the upside, as this is quite impulsive, and eventually this is going to bring the market to the top, to these highs, and then we'll start to see some movements coming back down. And what that will basically mean that, you know, as this is a 3, this is a 3, we're gonna get a 5 wave move back down. Now, as an expanded flat or a running flat, or it's either one of them, and that will complete our wave 4. So with this pair, in terms of the short term, pound yen, we're gonna go up a little bit more higher, taking out these highs, and then eventually, from once these highs have been taken, we're gonna see some sort of movement coming back down in terms of long term. Now, this is still a wave 4. Wave 4 in terms of the higher degree is one of the longest, most dragging corrections, especially on this pair from what I've seen. As you can see here, this wave 4 is in a triangle, and you know, this dragged out for God knows how long, to sort of 21st of May, so nearly, well, just maybe under a year. Um, and then look at this wave two, right? Short. This wave two is short. This wave two is short. So the wave four is dragging here, and this is a wave four. So this would drag along as much more as it wants to. And this is the bigger wave 4 degree structure. So this is gonna drag on. God knows how long it will, but I would say that we are is still in this correction. And in terms of if people want to look to get involved in this pair, I mean I would be looking for the buys for the short term, but it's still very very risky as we are reaching all-time highs. So we need to see what happens in and around this level. So that's pound dollar. Here's gold. I did say in my short view that we are getting this ABC corrected structure, and we are currently in that ABC structure. I did mention in my previous analysis last week when it comes to gold that this could be the wave 4 here as an ABC, and then we get one more pushed up as a wave 5. That could still be the case. However, I'm looking at this to be a 1, 2, 3, 4, 5 impulsive move right here, and since this is an impulsive move to the downside, and we have broken the market structure as well, I'm going to assume that this is a wave A as an impulse, and we're currently in this 1, 2, 3 move as a wave B before we come back down for a wave C. So we are getting this zigzag movement. This is a correction. This is a wave 2 correction. So this is going to be wave 1 of wave 3, and this is going to be wave 2 of wave 3. We'll come up, then come back down around 50 to 60% of this level, and then we start moving back to the upside. So I hope you guys do like my analysis. Please do like, comment, share, and subscribe. I do have a Patreon for all those people that are interested in mentorship, and the link will be in the description down below. And yeah, I'll see you guys until the next one. Wassalamu alaikum wa rahmatullahi wa barakatuh.